we have Dr. Pramod, who's dialed in from Dahisar East. How can we help you?
Hello.
Yes, how can we help you, Pramod?
Yeah, see, I'm calling from there, sir. It's regarding ancestral agricultural land. It is located in remote Maharashtra, district Sholapur. And that land is located around 23 kilometers away from municipal limits. Now, my question is, I would like to know that whether the proceeds of from the sale of this land are taxable, and in what way?
This is agricultural land, right?
Yeah, agricultural land, ancestral agricultural land. I would like to dispose it off since I'm settled in Mumbai now. And my question is, of course, it will be long-term capital gain, but how...
You want to know whether you have to pay capital gains tax?
Yeah, because it is agricultural land. And I am under the impression that what I gathered from...
Right, Pramod, let me get Vinay in. Vinay, does he have to pay capital gains tax if he sells agricultural land, especially since it's ancestral property over here?
Well, since Dr. Pramod has informed us that it is 23 kilometers away from the nearest municipality, clearly it does not count as a capital asset. So therefore, any capital gains as such arising out of the sale of the land is not taxable at all. This is not a capital asset. So you are perfectly safe here.
So Vinay, what you're saying is that anything outside municipality limits does not qualify as a capital asset, and hence
yes, actually that particular section 214 was amended in 2014, and what happened there was that you have different criteria now. So up to 8 kilometers with the population limits and the distance being from say a municipality or from a cantonment board or a town committee, etc. Up to 8 kilometers, depending on your urbanization criteria, it would become taxable. But beyond 8 kilometers, anyway, it is not taxable. The important change there was that in from 2014, the 8 kilometers is to be counted as the crow flies in a straight line. Earlier, it was, you could take it via the road.
Okay, so 8 kilometers in a straight line from the municipal limits. If your land falls beyond that, you don't need to pay capital gains tax on this. Also, very quickly, what is the rule as far as agricultural land is concerned?
Well, if the agricultural land does get hit, see, this is a definition of a capital asset. Once it's beyond this case, as is in the case of Dr. Pramod, then it's not a capital asset. So there's no question of capital gains. In the case of other agricultural land which does not meet this criteria, it would become taxable. But then again, you could claim exemptions under 54B and reinvest in another agricultural land and avoid the capital gains. So that is possible.
So that's the verdict. Like we told you, any land that is beyond the 8 kilometer, I can't say radius over here, 8 kilometer in a straight line from the municipal limits, that if you sell that, you will not have to pay capital gains on it.
You can watch live TV on our website mpnow.in. Find us on Facebook at facebook.com/magicbricksnow. And don't forget to click the like button. You can also follow us on Twitter at magicbricksnow. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/magicbricksnow.